The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, it's another day for jubilation in the markets, isn't it? Yeah, you hear being a little facetious there. What do we got here? We got Spanish bond yields are down. Building permits here in the U.S. are up. And, of course, building permits doesn't mean you actually have to build anything or employ people. But, hey, it's we got to rally around some of these developments today. So let me see here. Last I looked just a few minutes ago, we had lower volume on the NYSE and on the NASDAQ. Yes, that remains the case, but you know that's been pretty normal in the past few months. What's the phrase? The new normal. So there you have it. Lower volume. But there have been some lower volume on the downside days as well to kind of mitigate that a bit. But again, you've got some of these heavy volume days as well. So what to make of it? Hey, it is what it is. You've got the quantitative easing. Everybody continuing to speculate about that. Was reading an article on the Morningstar website this morning, just about how what the Fed is continuing to do along those lines. So, you know, to get people to put some more, to get more money into the markets to so-called stimulate the economy. So, you know, again, wouldn't be surprising if we did see some of these market rallies looking the same as they had in the last few months. So that's what we have got going on out there today. I put a chart of the IWM, the Russell 2000 ETF up there in front of you. And, you know, again, no surprise that you've got the little rally in the IWM happening today. So just, you know, more of this. It's day to day. The day-to-day trade is back as of now. The markets, the major indexes, still in a downtrend because we have not had that heavy volume, significant price gain to confirm a new rally, what is the historical signal. And it does work, by the way, to confirm a new uptrend in the market. It's always been, having learned that methodology years ago, it's always interesting to me that people try to guess and speculate, is the rally real? I think I've said this before on the show. It cracked me up. Back in 2009, I recall very well when that uptrend was confirmed back in March. And I remember watching some of the financial news. I believe it was maybe June or July. That laid into it. And there have been some pullbacks along the way. But there were people at that juncture still debating whether or not the rally was real. That was kind of funny. And you always have that. You always have that, is, you know, the people who, the pundits who aren't going to watch what the actual market signals are showing them, and who want to watch instead perhaps what the fundamentals, and I don't want to drift into my favorite rant here again today. Plenty of time. We can do that any day. What the predictions show, perhaps what some of the pundits are expecting to happen in the market, what their models show them. And that can be wrong. That can be wrong. In fact, just a few minutes ago, maybe some of you caught this. I was watching a gentleman who was head of M&A over at Citibank, and he was on television, and he was not speculating. In fact, it was interesting what he was saying. He was making the point that market conditions have actually improved, and their models would have shown that there would be more M&A activity. And there has been some. We've seen a few small deals. I think it's maybe been more in the small cap space than in the larger cap space. but he was just saying that their models would have and were predicting that there would be more M&A activity these days, and it was just not happening. Now, you can speculate, as was he, about some of the reasons. Could it be fear of government regulation, some uncertainty there? That would not be unreasonable in the current climate, I would think. But nonetheless, again, all speculation in that regard aside, again, it was an interesting example of how the models were wrong, and that can happen. So, in any case, just we live in interesting times. So it is earnings season, and of course, you're going to be hearing about some of the usual suspects: Johnson & Johnson, Coca-Cola, Goldman Sachs. Let's see here. I want to take a look at what we've got here after the bell today. CRE is, let's put up a little chart of that one, and I'm going to get to some of the small caps here in just a moment, because I want to talk about a number of the stocks that, many people perhaps have never heard of, but they are reporting earnings, and a lot of times you will see a little or large bump in some of these, regardless of what is happening in the market, and that could put a stock on the watch list. So let's see here. So we've got CRE, that's coming up. This is one that's come up recently, an interview that I did on moneyshow.com with a fellow named Chris Versace, and that'll be up today if you want to take a look at that. I believe he mentions CRE as a company having some potential. Now, he takes a look more at the fundamentals, and certainly on a longer-term basis, sure, does that have some effect on how the stock trades? Absolutely, because you do get a lot of the institutional investors going into the hope zone. This is a company that's been around for a long, long time, is well-known, and I've noticed that a lot of the more well-known companies tend to get a lot of the attention. This one, it's improving. Had some bullish action on the chart. You had the shorter-term 10-week moving average crossing above the longer-term 40-week line not too long ago, last month. So there is some potential on this one. But at the moment, let's see, this is a mid-cap, and it does have quite a bit of trading volume, does have a lot of institutional ownership. And again, it goes back to the days when this was quite a more, well-known, more successful company and successful stock. But it does look like things are turning around. You had some revenue problems here lately. Anyway, they report after the bell. That could be interesting. You've got, let's see here, Seagate, Yahoo, United Rentals. That's one, Stryker. So you've got some interesting things coming up. Let's talk about, though, what's happening later this week. I want to move on right now to some of these smaller names. And again, the ones that are probably just not very familiar to many people. And once again, I usually forget to do this because I get kind of engrossed in looking at the charts, but let me give out the phone number, 877-927-6648. If you want to call up, talk about small caps, earnings season, any of the smaller cap ETFs or sector ETFs, quite a few things we can talk about on here because so many things do impact the small cap market, and it's sometimes hard to really put a fence around the whole thing and say, okay, it's just small caps, low price stocks, because you do have so many other things that affect it. And along those lines, let me put up a chart for AMRB is the ticker on this particular stock. American River Bank Shares, AMRB. This company reports, they're supposed to report on Thursday. Now, when I said case in point about some of what goes on in the wider market affecting some of what happens in the smaller caps, obviously, you see right here, I've got a weekly chart. You can see the volatility in this particular name on a weekly chart. Wait till I put it up here for you on a daily, and you will really see kind of some of this crazy trading pattern in this particular stock. Now, On the plus side, it's holding up nicely above its 10-week average. This is just one of those very, very small companies that you got to be so careful about. Market cap, $73 million, okay? Moves 9,600 shares a day. That is what you call thin trade. This is American River Bank shares. They are a holding company for several banks, the American River Bank up in Sacramento and Sonoma counties in California, up in the northern part of the state. So you do see some nice upside trade here, and then some pullback, not unusual to see, especially as the market itself pulled back. And then also, you've had some, mixed emotion, shall we say, lately about the financial sector in the broader market. And of course, that's always due to what you hear from these bigger banks, JP Morgan, Wells Fargo, companies that really are only tangentially related to something like an American River Bank shares. But nonetheless, sometimes you do see anything in the sector kind of undergo the same treatment. Now, this is interesting. For this year, you are seeing earnings growth turn around at this company. In the past few quarters, you've seen some triple-digit year-over-year growth after some earnings declines. So, and again, let's see. Double-digit growth expected 2012, 19% increase again, some more double-digit 2013. So some optimism about this particular stock. This does look pretty good right now. It's getting a nice bounce this week. So this is one, and again, I have to say, this had not really been on my radar until I had started looking up some of what was going on with earnings season. But this is an interesting one. I may do a little more research, but so far I like what I'm seeing in this, but it does have some pretty hefty overhead resistance to overcome on this one. Looks like it rallied to a multi-year high of 831. Right now it's trading at about 746. So you got, in terms of a percentage gain on a lower price stock, got a bit of work to do. So this one is slated, I believe, to report on Thursday. So let's take a look at another one, HBNC. This is also a financial. HBNC is the ticker on this one. Now let's take a look at this particular company. This one's been around for a while and has had a bit of an interesting trading history. Horizon Bank Corp. And this is a holding company for a bank in Michigan. So this is kind of an interesting chart, too. It's still consolidating, another one of these very, very tiny little regional banks. But there actually is some potential in that particular subsector. I'm Kate Stalter. This is the Small Cap Roundup. We'll come back and take a better look at what's happening here in earnings season in small cap land right after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, I just wanted to finish up here with this analysis of home bank shares. Now, I think I mentioned before the break, this is a regional bank in Michigan and Indiana, and Horizon Bank. I might have just called it the wrong name there. Horizon Bank Corp is what this is, and this one has, let's see, market cap 90 million, tiny, 14,000 shares a day, tiny. Okay, you want to be careful on these. And I've got a daily chart up there on Tiger TV. You could see exactly why you have to be so careful on these. Just insane volatility. Let me just, it really doesn't look so bad on a weekly chart, but you do get the volatility always is more pronounced on a daily, whether or not you're using arithmetic charts versus logarithmic charts, and the weekly would be the logarithmic chart. So it would smooth it out a little bit, is basically just cutting to the chase the effect that it has there, so it does smooth it out. Doesn't look as bad on a weekly, as you know, if you've listened to the show before. I do use weekly and dailies those are the two I use mostly to make buy and sell decisions. I do look at intraday charts, not so much. Occasionally it can be of assistance in making a buy or sell decision, not so much. Usually the daily chart will be the one that will help me narrow down the timing the most, but it is very instructive sometimes to watch a 5 or 10 or 15-minute chart and just see at what point in the trading day buying or selling came in, whether it was spurred by news, whether that did reverse. You can also see a lot of times whether your volume on the day was due to buying or selling. A lot of times you have an upside day, and you do end up with heavier volume to the upside, but it can be the case that a lot of that volume actually was due to selling. And of course, that will not be a day when you see the stock finishing near its intraday highs, of course. That's maybe when it's just barely higher, that sort of thing. So that can be instructive. And also the monthly chart I use just to gauge longer-term trends. But essentially, daily and weekly charts. So looking at a weekly here on Horizon Bank Corp., this stock has been consolidating. It's got some work to do. I'm not so much a fan of this one. I just kind of pulled it up because they were reporting earnings, and I was noticing some nice year-over-year quarterly earnings gains. Let's see, up 36% in the most recent quarter, mostly solid double-digit earnings. But, the thin trade in this one, it just, in my opinion, makes this really risky right now. It's got a lot of work to do to regain its previous high. So, after kind of doing the analysis on this one, I would really dismiss this as right now. Not too exciting. Let me show you a better one. This is one I've written about, I've been tracking. This is Western Alliance Bancorp. WAL is the ticker on this one. Now, this is a low-price stock. It is trading about $8.79 right now. And I like the action on this one. Nice, relatively tight consolidation in a narrow range. It's holding above its 10-week average after clearing another little tight area of trading right back in here. This is a nice chart right now. I do like this one. And again, terrific earnings growth on this one. This is another one of these regional bank holding corps. It's holding corp for some banks in Arizona and Nevada. Actually, I think I said that wrong. I think you're supposed to say Nevada, I believe is how the natives say that. I always mix that up. In any case, this is a, let's see, let me check the market cap, $731 million. So that's not so bad. This is why I've liked this one a little better, because it's not as thin as these other ones. You've got $731 million. About 390,000 shares a day are traded on average. So you do have more institutional ownership in this particular stock than you do have in some of these other lower-priced regional banks. So this is one that I have been watching, and I want to just mention, this is the kind of stock that I am pointing out and talking about in the newsletter that it looks like we are going to be rolling out this week, as a matter of fact. So I'll talk a little bit more about that after the break, just to let you know a little bit more on that one. I'm Kate Stalter. This is the Small Cap Roundup. We will be right back after these messages.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, I'm Kate Stalter. This is the Small Cap Roundup, rounding up all those little stocks, those low-price stocks. 877-927-6648. Let's see. We have an amazing thing happening here. We have a POTUS speaking, and stocks not really slipping much, if at all, as that happens. And as I said a couple weeks ago when I was on the air, when the president was speaking, a lot of people have noticed that stocks tend to trade lower when he goes on TV. That happened with his predecessor as well. I'm not making any political statements here one way or the other. Just I was in the IBD newsroom at the time when Bush was president, and that was something that a lot of us used to notice and kind of joke about, that stocks would trade down when he was on television. That often happens these days with President Obama. Same thing. So I don't know. Stocks don't like it. Investors, traders don't like it when presidents speak. I guess that's the conclusion to draw there. So let's see. One of my friends there in the chat room, G7, I believe it was G7. I apologize if I missed who posted that. Posted about Sirius XM radio. I love that service. It's so cool. When you have my own car, I don't have it in my own car, but I've had rental cars that have had it. And it's just terrific, and it does make me think about adding it. But I work from home. I don't drive enough. So far, I have not taken the plunge. But when I have had a rental car on long trips that has had it, really, really enjoyed that service. Nonetheless, it's been a laggard stock. And let's see here. Yeah, I'd have to. So let's see here. But I believe even though the service, I don't know what the pricing is on all of these. I'd have to install new equipment in my car if I were to do this. So I'm not taking the plunge. In any case, we have here. I put up the chart, forming what you'd call a nice handle, following a little cup base there, a cup and handle pattern. You know, this stock has really, it's had rallies along the way, but it's never been a leading stock in any fashion really to speak of, although it did have it had a pretty nice rally there between, in the usual time frame there, late 2008 and then mid 2011, didn't do too badly, but of course that was roughly in tandem with the market. You had that decline there. It actually, comparatively speaking, did not do too badly in the decline, the flash crash-induced decline in the summer of 2010. So, all in all, it's actually showing a bit of improvement. We're seeing here the earnings expected to be 11 cents a share next year. Okay. Which would be a 57% increase, expected to come in at 7 cents a share this year, so that would be flat. So we've got some interesting action here in this particular stock. I am liking the pattern there. So we could see some boosts in this particular one. Let me just see what we'd be looking at the buy point. Then I want to move on here. So the buy point you might be looking at in Sirius right now would be $2.41. Now I got to tell you, I tend to, in the newsletter I'm rolling out, one of the reasons this stock has not come up on my radar particularly is because it just is such a low price name. I tend to look at stocks trading in that $5 to $12 range. I do like the ones that are optionable, where you're coming in at the $5 level. So this can add a whole lot more risk when you're talking about something that's trading at $2. So that's just why this hasn't really appeared on my radar. But nonetheless, it's kind of interesting, could have some potential, particularly if we really do see a turnaround in earnings that happens here. Okay, so let's see. I want to move on and take a look. By the way, Western Alliance Bancorp, the one we were just looking at, reports earnings Thursday. Let me take a look here at another stock that I used to own. I don't at this point. This goes back probably about, oh my goodness, maybe around 2005, 2006. That I was in this one and did well in this one. The charts, no particular prognostication or forecast on my part. Just the chart. The chart was looking good at that time. Now this is EZPW, and since that time I've also kind of had a little change of heart in terms of what are some of the companies that I like to invest in. I am no longer really comfortable in companies whose business model bothers me. It bothered me back at the time I was in there. I guess I was a little more mercenary back then than I'm willing to be today. This is the pawn shops. They call it consumer loans, payday loans. The kind of business that really, in my view, is predatory. Taking advantage of those in society who really just, are least, I don't know, who do you take advantage of, but least, the ones least likely to, that you should not be taking advantage of, the poor, basically, is I guess what I'm trying to say here. And you can always say, well, folks need a place to get a loan, folks need a place to maybe get some money in advance of payday if they're running short on cash. Yeah, you could say that, but you just hear about so many of these companies where so many cases where people get into trouble with these companies. And I have heard, just anecdotally, that these tend to proliferate around military bases. I actually haven't lived near a military base recently, but so I can't verify that. But I know that I have heard that for sure, and that, very sad. Very sad that would be the case. In any case, this company, let's see, Easy Corp reports earnings on the 19th. You are seeing a little bit of deceleration in earnings growth, although some double-digit growth forecast nonetheless this year and next year. The chart's okay. You're kind of, you might say it's a cup with handle right here. In my view and by my training, that looks to my eye like it's a little bit low in the overall pattern, that you might want to wait on this one. You might, if you are a more aggressive investor, there's some bullish signs here. Let me go over to a daily chart and we can take a look at this. Okay, so you notice here you do have the 50-day line crossing above the longer 200-day line recently, and that can often be a good indicator. It happened a little bit in advance here, and then you did see some little bit of decline after that occurred, but nonetheless, that can often precede further price gains. So you're seeing some gains here in the last couple of sessions, and you could have a possible buy point back above the high right over in here above that 33.36 mark, I believe that is 33.38. So you might have another buy point right above there if you're a more aggressive investor. So that's another one there that's coming up. This one has a market cap of almost 1.6 billion. So it's on the upper range there of small cap. Some decent liquidity, about 300,000 shares traded per day on average. This is one of those that's interesting to me just because it's been around so long. I've known about it for so long, and sometimes you're just surprised to be reminded again of how small some of these companies actually are. So that's kind of an interesting one. Let me come back to one more here, and then I want to talk a little bit about some small caps with good earnings growth, which is a way that I do screen for a lot of stocks, and a lot of really good ones come to my attention that way. But let me show you one more here. This is United Rentals, okay, and the ticker on there is URI, upper respiratory infection. I knew that was something. I knew it just came to me right then what that ticker was. Upper respiratory infection, URI. Okay, United Rentals. Now this has been an area where there's some consolidation in the equipment leasing and rental industry. And in fact, a couple months ago, this one acquired the assets of, it acquired something called, what is this called? Coble Trench. So that was a smaller rental company in the southeast. Now this one, I'm liking the consolidation on this. I'm showing it to you on a daily chart right here. So you're seeing how it pulled back below the 50-day line. This is one I'm just kind of watching the consolidation here. Could be a good one. This is one of those. As I mentioned, I do use the charts to determine the buy and sell points. We are not at a buy point on this one at this particular juncture, although, who knows? You might see some interesting price action in this one as a result of that earnings report. And even if it does make a nice move up, not uncommon to see stocks then consolidate a little bit as some holders who have been in there longer do take some profits. Perhaps they've been waiting for that move as the stock has been consolidating lately. So this company reports today after the bell, and let's see, excellent yearly earnings expected, $3.06 per share. That's a 64% year-over-year gain for 2012, $4.20 in 2013, so another 37%. As you know, those analyst estimates can be wrong, either to the upside or the downside. It's interesting because I have seen some analysis done that shows that frequently the Wall Street analysts are actually underestimating how well a stock will perform in its earnings report. So I think a lot of people naturally assume that Wall Street is going to be overly enthusiastic. No, not necessarily the case. They're wrong in both directions. So in any case, this one is consolidating nicely. I like it. It's one to watch. This is actually a mid cap. Now I know by some definitions it's considered a small cap. Kind of right on the fence there. According to S&P 600 and Russell definitions, it would be a small cap, market cap of nearly $2.6 billion. Great liquidity on this one. Almost 1.8 million shares traded a day. So, this is not one that I look at as particularly risky, just because you have the liquidity, you have institutional ownership. It's not one of these low price stocks that tends to trade day to day in a normally very volatile fashion. So the worry for me really at this juncture would be more the general market condition, just wanting to see that the market is in more of a sustained rally rather than this kind of day-to-day stuff, just getting whipsawed once again by whatever the news is out of Europe, out of whatever the economic news is that everybody decides they're going to interpret in a joyful fashion on that particular day. So we're still kind of in that, and who knows, being in an election year, you're just going to have a lot of that going on. So we may be in for some of that volatility, or if the market does go back into a confirmed rally, then you will see 3/4 of stocks historically, sometimes more than that actually, do tend to trend along with the major indexes. So that does make some kind of buy just a little less risky from that perspective historically. Okay, so let's see here. I want to talk about some of the earnings and how companies are doing in terms of what they have been reporting in recent quarters. It's funny because if you listen to my colleague here, Ken Shreve, I know that he talks about a lot of these price leaders. Of course, Apple, no kidding. Chipotle Mexican Grill, Priceline. I hear Basil talking about a lot of these stocks. Alexion Pharmaceuticals, Lululemon. So you'll hear a lot about these stocks on TFNN. They're terrific. I track these. I'm in some of these actually. Yeah. So in different portfolios, not the small cap portfolio. However, what's interesting is if you look at these, what besides great charts do they have in common is this earnings growth. The fundamentals, they continue to deliver better than expected earnings growth. So we have this segment here is winding down, so I want to just in the last few minutes of the show today talk about some of the smaller cap names that maybe are not so familiar to many people, but also really do have the kind of earnings track record that you'd like to see, that has been spurring growth, and the charts are looking good as well. This is Tesco, TESS, and that is Tom Petty. So he's telling me that we've got to get out of here for a few minutes. I will be back. We'll take a look at Tesco and a couple other low-price names whose charts I like and I definitely have on watch lists at this point. I'm Kate Stalter. This is the Small Cap Roundup, and I'll be right back.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Back with our last segment here on today's edition of the Small Cap Roundup. And just in case you just tuned in or missed the earlier part of the show, looking like we are going to be rolling out our Low Price Leaders newsletter this week. So stay tuned here and to tfnn.com, of course, for more news about that. I will be sitting in for Larry tomorrow. I believe it's the last time I'll be doing that while he is on his vacation. I guess he's coming back. But in any case, I will be sitting in for him tomorrow, so perhaps I will have more news about that. His show is at 12 p.m. Eastern, so listen in for that and a little bit more information coming down the pike. I've got a chart for a stock called Tesco, T-E-S-S, TESS is the ticker. And she makes, I know, just she, it sounds like a girl's name. Tess makes antennas for wireless transmission. Now, this is an interesting story. I've got a daily chart in front of you. This stock has advanced more than 86%. 86 so far in 2012. And it had a year-over-year income gain of 55% last quarter. This has a market cap of $200 million, so it's a small stock, not as small as some of those regional banks that we were looking at earlier in the show. It's thin, moves only 52,000 shares a day. Let's see, it bolted 39% last month, and you had monthly volume was more than double February. Now, because this is so small, so thinly traded, this is one of these with very sparse institutional ownership. It, let's see, about 66 or so mutual funds in there. And that the mutual funds and hedge funds, by the way. And that number can change. Sometimes you see different figures in different places for how that's reported. But nonetheless, the point being, very little institutional ownership, and that makes sense with such a small company. And as always, that makes a purchase riskier. Now, on the chart, this one is consolidating a little bit above its 10-day average. And you see here on the daily chart, it's well above that 50-day line. Now, this has made some big price moves in recent sessions. You know, I'd like to see it calm down a little bit. You really did see kind of, if you look in here, I'm indicating on Tiger TV, you see some of these big price moves earlier this month, and then late last month, some big price moves. You can see the character of the trading changed. And you did see some much more significant, bigger percentage gains. Now it seems to be settling down a little bit more. Would kind of like to see that again. Not unusual to see some kind of pullback, just some kind of retrenchment of the pace of investing and trading after that kind of gain. So this is an interesting one to watch. Again, big earnings estimates on this one. 60% earnings growth expected this year. So this is one that I definitely have on some watch lists right now. Too extended to consider a buy at this point. I really would like to see that trading settle down. Let's see. I'm almost out of time here today. And it looks like, this one reports May 2nd. Let me just show you one more chart before I'm out of here for today. And I always get the ticker on this one wrong. Let's see here. Integramed is the name of the company. INMD. And they are in a very specialized niche. You know what? It looks like I am going to have to come back to that one I'll come back to it tomorrow. INMD, it's Integramed, and this one looks like it is also a bit out of buy range, but one that I want to keep watching. I'll talk about this on Larry's show tomorrow. Another interesting name. I'm Kate Stalter. This is the Small Cap Roundup. Looking forward to joining you again tomorrow at noon Eastern.